Welcome to the PropTech podcast. It's Kylie Davis here, and I'm delighted to be your host as we explore the brave new world where technology and real estate collide. I passionately believe we need to create and grow a sense of community between the innovators and real estate agents, and sharing our stories is a great way to do that. Now, the aim of each episode is to introduce listeners to a PropTech innovator who is pushing the boundaries of what's possible and explore the issues and challenges raised by the tech and how they can create amazing property experiences. Now, my guest in this episode is Dave Garland, Managing Partner of Second Century Ventures and the Reach Global Program, the #1 PropTech accelerator in the world. And from its start as an accelerator of US-based PropTechs through the National Association of Realtors, Reach has expanded over the past 2 years to create programs in Australia, Canada, and soon in the UK. And given the success of Aussie PropTechs such as ActivePipe, BoxBrownie, and RateMyAgent in the US programs, we like to think that it was the Aussies who showed Reach that innovation was not just the purview of the US industry and that we played a role in their expansion. Now, Dave has met literally hundreds of PropTech entrepreneurs across his career, and he has a highly honed instinct for what makes a technology successful in real estate, property management, and construction, and where the tech is going. And I wanted to get him on the show for 2 reasons. If you're a PropTech listener, you'll get some great insights into how to be successful and the work you'll need to do to make it. And if you're a real estate agent or property industry listener, this is also for you. Dave has his finger on the pulse of new technology coming through the pipe, and it's interesting to know all of this is being funded by the National Association of Realtors, the world's largest industry organisation, which is effectively residential real estate. So, Dave Garland, welcome to the PropTech podcast.
Thanks, Kylie. It's a pleasure to be here.
Yeah. Now, Dave, normally we on the PropTech podcast get everyone to start with their elevator pitch, but I'm assuming you have heard an awful lot of elevator pitches in your day, and I want to pick your brain about how we can build better PropTech. So how many elevator pitches do you actually think you've probably heard?
It's a great question. I think that's, I guess the bigger question is like, what constitutes an elevator pitch? I mean, if we're just looking at the general idea of, hey, here's my idea, what do you think? Then quite a few on a weekly basis for the last 10 years. I'd say at least 5 per week for the last 10 years. And that's just me and not really counting the rest of my team. It's really a global team. And so there's been a lot of elevators.
That would be hundreds of thousands.
Yeah, and it's quite a number of them. And whether or not you hear them on the elevator, as it were, face to face, or increasingly just more pitching sent to us via email or via social media, etc. So they come from all over, but there's a lot of ideas out there, and I love hearing the ideas too. I mean, these ideas are super important, especially when it comes to the problems that we're trying to solve in the real estate ecosystem. So
what are some of the best ones that you've heard? Like in the last couple of months, what are some of the best ones that you've heard?
Oh man, there's quite a few good ones. I would say this, that the best ones are the elevator pitches that leave me wanting more. They're the ones that entice me to kind of lean forward in the conversation and essentially say, oh, that's interesting. I haven't really thought of it that way. They're simple. They're oftentimes narrative, meaning that they'll tell a story. And what I mean by that is, the best ones set up a framework of here's not only a problem, but here's emotionally, the impact of that particular problem. Because these elevator pitches are not just about the content of the pitch. It's also about the individual who's giving that pitch. Because at the end of the day, when you walk away from somebody that supposedly you just met in an elevator just randomly and they pitched you on an idea, you're only going to remember a couple things about that. And oftentimes you'll remember the emotion that they left you with. So I guess what I'm referring to are those circumstances where, they're able to create this narration of what's going on in the world and this problem, and how they've created and crafted a solution that's able to address this particular problem. And then they kind of stop, and they also understand that, all right, I'm going to wait for that dramatic pause so that they can ask me for more. Right. So I think some of the best are like picture a movie trailer where you have that sort of voice of God that comes over, and it's like, in a world where real estate is experiencing phenomenal issues in the transaction, and real estate practitioners can't close fast enough on certain deals, and imagine the impact and the humanity, and oh, by the way, we've got a solution for that. So that type of narration where there's some emotion behind it, you can tell the passion behind the entrepreneur, and they've done their homework, and they've crafted the message in such a way that entices me to want to learn more in a very simple manner. Those are the best of the best. And I think that those are the ones that stand out. And remember, it's just a first step, because it's after they get you in the door, then the real information comes out, and the devil's in the details. And that's obviously when you take that next step and decide whether or not you want to work on an investment strategy with them, or bring them into the program, or invite them into various parts of the ecosystem.
So that ecosystem has been around now for how long? The NAReach platform, 10 years?
So NAReach, the first class started in 2013. And so it's been a while, and so there's been a phenomenal amount of change within the ecosystem since then. And the companies that were invited into that program were a little bit earlier to the game. It was more of a incubator / accelerator versus where we are today, which is much more of a scale up type program. And in 2013, the companies that came in, I would say, were really the trailblazers in the space. And they focused on removing certain amounts of friction within the transaction itself. And at that time in 2013, there weren't a huge number of companies, but they were attacking very big challenges for realtors and for practitioners. And some of the items that they were focused on were things like enhancing communication between real estate practitioners and the consumer, or streamlining moving operations for consumers, and just in general, connecting the practitioner better with other individuals within the ecosystem itself. And then, littered on top of that, you had some predictive analytics, machine learning type systems that were more in their infancies. And that's I think, largely the types of companies that came to bear on that first 2013 class in the United States.
Mm-hmm. So in the 7 years since that first class started, has occurred, how has the PropTech environment changed over that time? Like, what are we seeing now? How has it grown?
Yeah, that's a great question. I think that if we were to look at sort of the comparison between the companies that, let's say, we're bringing into our programs now and investing in now versus back then, there's some similarities and some differences. I think that the similarities are that at the heart of it, entrepreneurs are still passionate about removing friction in the transaction, as well as other friction points within the general real estate ecosystem. So that tends to be a mainstay. But now I think more than ever, it's also about improving the customer experience. And part and parcel, so you could still be a B2B type strategy, but the net return is to enhance the experience for that end consumer, whether they be, a property owner, a buyer or seller of residential real estate, a property manager, et cetera. How do you really enhance that experience? And then also, I'd say that today it's more about interoperability between markets and between segments. And what I mean by that, it's a closer tie between like settlement service aspects of the transaction. So you have things such as mortgage, title, escrow, property management, contractor networks, search, marketing, advertising are much more intertwined now. And that's oftentimes due to technologies and businesses that are laser focused on shrinking the time and the data management challenges that help to connect those disparate parts of the transaction. So I see some really interesting changes and some ironies in the space as well. I mean, I think that on one hand you have what I call the great decoupling of the real estate transaction versus sort of the aggregation of systems and processes in the space. And it's what I mean by that is, like, on the decoupling side, every aspect of the transaction journey is being picked apart. And entrepreneurs are finding ways to improve the micro parts of that particular process. And they're getting really good at it. And whatever it may be, whether it be at the top of the funnel in locating customers down to the actual specific parts of a disclosure form, and and they're building businesses around that. And the best of the best in terms of those organizations are leveraging the success of their businesses as a wedge in the market to build what I would refer to as micro marketplaces and then expand further into the transaction. So on one hand, you have that decoupling of the process. Whereas on the other side of the coin, you also have organizations that are largely focused on solving the entire journey of the transaction and bringing it all under one roof. And these tend to be the larger organizations with the big brands that want to essentially say, hey, this is our process, soup to nuts. And if you come with us, then presumably you'll receive some economies of scale and some efficiencies because we do everything under one roof from a technology standpoint. So I think that's kind of an interesting dichotomy that I've been seeing as of late, and certainly something that you didn't really see 8-9 years ago.
Do you think real estate agents have kept up with it? How do you think the way that we've embraced change as a real estate industry, has that changed over those sort of 7 to 9 years?
Some have, some have not. I mean, look, it sort of depends on what type of a real estate agent or practitioner you're talking about. I mean, if you're talking about a property manager, you can focus on certain areas where some property managers are substantially more open to leveraging technology to solve some of the problems that they've had for their tenants or for their owners, et cetera. And this is one of the areas where I would argue that Australia tends to shine is in property management technology. When you contrast that with, let's say, property management technology, specifically in the US is really earlier in terms of timing for rolling out those types of technologies. Australia has been on the forefront of that for a while, and that's by nature of the way that cities and that people live and work and play in Australia versus the majority of the US market. So it really kind of depends.
And now let's hear a word from our sponsors. For almost 16 years, Direct Connect has made moving easy for over 1.2 million renters and homeowners by arranging connections to a wide range of services, from electricity and gas to internet and pay TV. With a national team of local account managers who are experts in the industry, Direct Connect are there to support your real estate business with competitive rewards for every successful connection, plus an industry-leading rewards program. The connection process is simple, and Direct Connect's always-on guarantee ensures your customers will be connected on the day they move in. Direct Connect offers a range of market-leading suppliers, and Direct Connect has now made it even easier than ever to send connections, directly integrating with MRI Software's Property Tree. So in just a few clicks while processing a tenancy, you can send the connection details through and get your customers connected. To make the right connection and find out how Direct Connect can make moving easy for you and easy for your customers, visit agents.directconnect.com.au or call 1300 558 169. Did you guys see in the US, like we saw here in Australia, though, that during the sort of COVID period, there was an increased adoption of tech?
Certain types of technology, absolutely. I mean, and it's just by demand. I mean, when you have a massive demand to, let's say, close transactions in a time period where social distancing is required, or where you can't do things traditionally face-to-face, it really accelerates the use of certain technologies over others. And we certainly saw that in terms of the document management, online document management, remote online notarization, different forms of communicating with clients. It really fast-tracked some of those technologies at a speed that I don't think many people had anticipated. And I think that was actually a net benefit for the industry as a whole.
So you talked before about how the problems that are now being solved are becoming sort of more niche or micro. We're unpacking more and more of the whole transaction process. But what are the common mistakes that you see startups are making around the problems that need to be solved?
I'd say if I was to put some of the biggest mistakes that I see consistently across, whether it be applications or just general pitches, is when entrepreneurs that tend to be new to this space or may not understand the difference between, let's say, a TAM and a SAM. And what I mean by that is a TAM would be a total addressable market, and a SAM is a serviceable available market, and the two are vastly different. So a total addressable market is really a total market demand for a product or service, which is oftentimes calculated in annual revenue of a service or sales of that available market. So you could say what's the total addressable market, or the total available or addressable market of the U.S. home sales, for instance. And in any given year, you'll have about 5.5 million transactions that take place, and you multiply those transactions times the average dollar volume of those transactions, and you'll get the theoretical total addressable market of U.S. housing stock, for instance. That's just one example. Now, contrast that with a serviceable available market, and it's really sort of the portion of the total addressable market that can be serviced by a company's products or services. So I think oftentimes that entrepreneurs conflate that dollar value of the bigger addressable market, and they say, okay, well, this is how big that market.
We win 100%.
and all we need is 1%. And if we get 1% of that market, then we'll all be insanely rich. But the reality is that the serviceable market tends to be substantially smaller. And so getting that right is really important, especially as you break down or decouple the process and focus on niche areas within the industry. Really understanding that difference between TAM and SAM, I think, is really important. And that's something that we really encourage entrepreneurs to look at when we're discussing their objectives with them. And it's something that we oftentimes really challenge entrepreneurs on is really, how did you get that particular information, and why do you think the market is that big? And then why do you think the market that you'll be able to achieve is so big within a given point in time? And that becomes a catalyst to all sorts of fun conversations.
So really being able to explain how you got to that number and why you think you can do it, as opposed to, oh, that's what my accountant said to put in the spreadsheet.
Yeah, I mean, look, I think that's it's a really good point, because when you look at any average investor deck that an investor will put together to ask for capital, there's always a slide in that deck that discusses that market size. And entrepreneurs will leverage that information to justify the build of their particular technology. And they'll engineer something absolutely brilliant and beautiful and sexy. And oftentimes what tends to happen is that they'll engineer and they'll get so far ahead of their skis that they don't take the time to really understand the market. And so by the time they're all done building this value, this MVP, this minimal viable product, they go to the market only to be told, sorry, that's not what I want, right? From the demand standpoint. And I think that it begs the question, really, how do you know what the consumers want, or how do you know what the demand is for your given product or services? So ideally, the best of the best out there from an entrepreneurial standpoint really understand intimately the problems and the challenges that their customers face. And that's really the genesis of product market fit. And one of the reasons, actually the number one reason why startup companies fail, it's not because they run out of money, it's because they lack the product market fit, meaning that there's a demand. And if they don't truly understand the demand and they build to something else, then there's no product market fit. If there's no product market fit, then there's really no business. So, I mean, when you look at survey after survey of entrepreneurs that went out of business, and you really, suss out why that organization failed, it's, for the most part, there was a lack of product market fit versus, I ran out of capital.
What do you think are the biggest problems we should be solving for now in real estate, given all the tech that's already gone on over the last 7 years? Like, where do you still see the pain?
Look, there's pain everywhere.
It's so painful.
There's pain everywhere, but there's also the other side of that coin, which is, how do you move towards the pleasure part, right? I mean, all human behavior is really governed by the idea of moving away from pain or moving towards pleasure. So either removing some friction, or we're making things better, quicker, faster, because it brings us to a higher degree of solvency quicker. And so I think that in general, removing barriers, making things a little bit more efficient, those are the sort of the broad themes. And then real estate has gotten so big in terms of the interoperability that I was speaking to, that there's all sorts of new challenges that come about when you start bringing ancillary segments together better, quicker, faster. And I think that those will be some of the big things to solve for, particularly around data sharing, interoperability, consumer information. And look, there's a whole host of new issues that have just been brought to light by COVID as well, and that are really, really unique. So I think I truly believe, Kylie, that 2021 will really mark the beginning of a renaissance period for real estate technology. And the reason being is because COVID has really allowed us to streamline and forced us to move certain processes quicker, and oftentimes has also had a dramatic impact on the market. There's this intersection of industries, and there's now this incredible amount of capital flow into the space, more so than ever before, that's bringing better, smarter entrepreneurs that are taking bigger risks to help a traditionally underserved industry that, by the way, happens to be the biggest industry in the world. So I think, with all that being said, there's some really, really neat things that will be built in the next couple of years, but those businesses will be built on the idea of solving some common familiar problems that aren't just common among practitioners in one geographic location, but practitioners in all geographic locations.
Fantastic! I can't wait for that. I love the idea of a renaissance. We could after 2020, I think we could all look forward to something, and we do feel like we've kind of been through the Black Death, don't we? So you guys are also expanding. In the last 7 years, you've gone from almost a startup at NAREACH, and now you're scaling up a lot too. Tell us a little bit about and we've just had the second intake in Australia of the REACH program. So if you haven't got your applications in, everybody out there, hurry up. Shelley Trung and the team at REACH are currently going through new assessments. But tell us about where you are now. How many countries?
So right now we have programs that are domiciled in Australia. As you just mentioned, Shelley and her team are doing a phenomenal job getting ready for the 2021 program that'll be launching early part of next year. We have a program that just launched in Canada in October, and we'll be hopefully opening up our program or announcing our program first part of December in the United Kingdom. So those are where those programs are domiciled. In addition to the US, we have two flagship programs, one Reach, the original Reach program, and one that's segmented specifically for commercial, and that's our Reach commercial program. And really all those programs are very similar to one another in that they're intensive multi-month sales and marketing programs really aimed at maintaining and helping organizations grow at a substantial pace by leveraging networks of mentors, partners, practitioners, and strategic opportunities with folks both in the industry as well as outside and surrounding the industry. So it's been a wonderful voyage thus far, and we're really trying to help out the industry as best we possibly can, with the idea that if we can take the best of the best, find the best of the best, and provide them with the right tools, education, talent, and assistance, then really we're doing good for the industry. And that's really what our sole reason to be is. I mean, we're not like a typical venture capital organization. We're not a typical accelerator. We're really a scale-up program that is backed by a trade association, the largest trade association in the world. And so we have a responsibility to ensure that the practitioners around the world are provided with the best technologies to remove friction in their day-to-day tasks.
Okay. So if I'm an Australian PropTech, though, it's not necessarily the case that I should just apply for Reach Australia, though, is it? How do I decide which Reach program I want to go into?
Yeah, so the way that we've structured it is that we have these Reach programs that are specific to the region that you're building your business in now. So for instance, if you are a organization in Singapore and you're looking to really grow your operations in Australia, well, Reach Australia would be highly applicable for you to apply to. If you wanted to build your operations in Canada, then obviously Reach Canada would be the place to apply. But the idea is that once you're within the family, so to speak, we find that the best ideas out in the ether are not really confined to one market. And that's really one of the veils in which we evaluate each one of the potential companies that come into the program, is that if a challenge is specific and unique to one particular geographic location, well, that's nice, but we're looking for organizations whose technologies can not only scale beyond that particular market geographically, but also potentially impact other segments. And those are the types of companies that tend to grow at warp speed and tend to serve a very large segment of the real estate population.
Okay. So what kind of PropTech's really exciting you right now? Like, what companies have you seen out there that you think, wow, that if I had a lazy million, I'd back that horse?
We're backing quite a few incredible companies right now. I mean, we've really expanded our operations and we'ked hard to be the most active investor in the real estate technology space. And the investments that we're making right now, we're hoping are not just solving problems today, but the problems that will be impacting practitioners 5-10 years from now as well. But me personally, look, I'm a deal junkie and I'm a sort of a student of what's going on in the macroeconomic sense on a global level, and I really like the ecosystem that we're in right now, and I really believe that there's a gold rush coming to this space. And you're starting to see it just in terms of the amount of capital that's being invested in property technology over the last couple of years. I think you had roughly 30+ billion in 2019 when you remove some of the investments in like the WeWorks of the world. This year to date, you've got about 10 billion that's been invested in property technology in spite of COVID. So you have this increasing amount of capital that's also going to be met with a substantial demand for your general large-scale institutional investors to play in the real estate ecosystem, both in markets like the US and Australia, as well as in other global markets throughout Europe and China. And the reason being is because with this flush of capital that is being created for the most part due to COVID, you're going to have a lot of folks chasing for yield and trying to avoid the inflationary pressure that comes with printing a lot of money. So there's only so many places that you can put your capital in order to help ward off against inflation, and real estate tends to be one of the most popular instruments. So I think that with that amount of capital that's coming into the space from investors, in conjunction with the amount of capital that's being pushed toward technology that's now impacting the space, you have like a perfect storm for a lot of new innovation. And that innovation, or the gold rush, as I put it, will really be powered by companies that leverage things such as artificial intelligence, or that are focused on enhancing.
Sorry. It's 2020. It's 2020. There's always a dog in the office, right? And someone's just delivered something to our front door, so they've just gone to let everybody know.
That's one of the beauties of COVID, is that it's changed the way that we live and work. And to that point, it's the office has changed, the retail environment's changed. All this has changed, and this change doesn't mean those aspects of real estate go away. It means that now there's going to be new questions of where to invest your money, and that's going to drive more and more people to the real estate technology space. So to answer your big question of, hey, if I had $1 million just myself, just lying around, and there's a gold rush, well, like in any gold rush, you don't want to be the miner. You want to be somebody who's providing the picks and the shovels to the miners. So if this gold rush is really going to be powered by companies that are leveraging artificial intelligence and machine learning and computer visioning and consumer concierge modeling and sensors, the picks and the shovels of that rush will largely be dependent on data and the availability of data that can be consumed and ingested quickly. So my sort of easy million, as you put it, would be investing in companies that have not only access to this data and access beyond just the transactional property data, but the deep behavioral data that's going to be captured and traded in the future, the sensor data, the IoT data. So really what I'm looking for is really the Palantirs of the real estate vertical, those massive shops that will host all the data.
Yeah, I thought you were going to tell me you were going to give it to Amazon Web Services or something, as hosting everything in the cloud. As a real estate agent, you need to be doing more content marketing. But creating posts for social media, creating videos and reports is hard work, lots of hard work, and it takes time. So that's why you need HomePrezo. If you're a typical agent posting 1 or 2 social media posts a week, HomePrezo can save you between 75 to 100 hours a year. How many more properties could you sell if you had that time back? HomePrezo can help you create engaging, informative videos about how the property market in your local suburb is performing. Plus, it makes creating suburb reports, rental videos for landlords, and social media infographics an absolute piece of cake. If you can type in a suburb or type an address, you can create a Prezo using HomePrezo in just a few minutes. Listeners to the PropTech podcast receive a 14-day free trial. Now that's twice as long as the normal free trial. So go to homeprezo.com.au and click the sign up button and use the code PropTech to get your extended free trial, or click the link in our show notes. So have you got any specific names for us that you like? One of the first investors in DocuSign, which is kind of one of your flagship investments. What companies, specific companies at the moment that are in the program that you think are doing a great job?
Well, I mean, I think that you look at the Australian program this past year, been some phenomenal success stories just out of that inaugural program. You have organizations like Uber Park with some of their marquee partnerships with companies such as Porsche are doing incredibly well. They've also secured some pretty amazing pilots with capital organizations. You have organizations that have really set up themselves for scaling with some nice capital raises. Those are organizations like Sorted and Igloo Home. So there's been some pretty big wins out there just in this first year in the Australian ecosystem. I'd say, broadly speaking, there's a lot of financial wins for us that we have within our second century venture portfolio, both in our reach classes in the US as well as in Canada that we're all excited about. But I'd say, stepping back and broadly looking at our biggest strategic investment success has really been us doubling down within the reach program. And I think that largely has been our best strategic investment to date over the last 10 years, by far, just because of the number of practitioners in the space that we've been able to impact. So we're investing in dramatic fashion in building out this infrastructure to help support these businesses. And the more that we do that, the more that we're able to provide education, sponsorships, mentorships, et cetera, for the benefit of these companies, allows us to get to know the entrepreneurs better so we can make even better strategic investments for them through our second century ventures vehicle. But also just in general, when you look at what's happened in other industries when you've gone through this renaissance period, and I think that fintech went through this a couple of years ago. They're a little bit ahead of the real estate ecosystem, and healthcare and biosciences have sort of gone through their renaissances in terms of the amount of capital that have been pushing towards innovative ideas and startups and technologies to support the ecosystem. What tends to happen with that capital infusion is that it also pushes up the availability of educational opportunities, and we're not really seeing that in the real estate space. Now, what I mean by that is that, take fintech, for instance. When you look at what happened in the fintech environment, in terms of, let's say, the number of incubators or accelerators per 1,000 new startups that were created, you had 15 times the amount of incubators and accelerators and scale-up programs in fintech than you do in real estate today per 1,000 companies. And that's a drastic differential. So the ecosystem is craving more education. The ecosystem is craving more connectivity because, frankly, one of the unique things about real estate is that it's built on this idea of the strength of relationships. Mm-hmm. And I think it's sort of unique to the real estate space. I mean, it underpins everything that being a practitioner is all about is the relationship. And without the knowledge of how the industry works, it's tough to take that second step and deepen those relationships.
Mm. So what are your predictions for where PropTech's going in the next 5 years? We've talked about AI and artificial intelligence and machine learning and a little bit already, but what do you think in 5 years' time selling or buying a home will look like because of this technology?
Well, it's I think, as I hinted to a little bit earlier, this impact from COVID will have a profound, long-lasting impact on how we transact real estate. And you're just starting to see the impacts of that across retail, across the commercial segments, folks that are still in leases and being impacted by this today. The retail market, for instance, has been completely decimated and on a physical basis, and you have new organizations and new segments within that market sprouting up in order to take those incumbents' places. So a little too early to tell, but you have a massive opportunity for new business models. The commercial spaces it has been radically impacted as well, and that has done a couple of things. I mean, it's forced the commercial segment to intersect with industries that we never thought it would intersect as quickly, like healthcare, for instance. Mm. And you're going to have changes to your work environment, but also it's impacting the housing market and how people are choosing to live, to work, and to play. Because if all of a sudden I'm not expected to go into an office environment and I can work from home and from the comfort of my laptop or computer with a nice screen behind me and nobody really cares where I am, then all of a sudden it's as if my shackles are off. I can go and live in a place I never thought possible. Mm. And we're at the very early stages of figuring out what that impact will be. But I think that you're going to see some demographic shifts, some migratory shifts in terms of where people can choose to live, work, and play. And I think that these particular trends will have far-reaching downstream impacts on other industries, the industrial sector of the market, and also the retail and development and construction sectors of the market. So the technology will tend to follow those particular trends, and the practitioners will still be there trying to make the most of it for the benefit of those consumers. And those practitioners who are leveraging education and getting super smart on, okay, what are these migration patterns? Where is the demand going? And then also, what technology can I use in order to facilitate long-term relationships with the consumers? That's what it's all about. So the baseline of the transaction, I don't think is changing, other than it will become quicker. Now, what will change, I believe, will be the segments that start to intersect more with real estate much quicker. The insurance, the banking, the mortgage segments, and these stronger intersections will allow for quicker transactions. And you're starting to see that more. And some of those products in the financial services segment allow for equity release like we've never seen, for the benefits of homeowners, for the benefit of investors, et cetera. So you're going to see some pretty cool changes. And then, on the living side of things, as we continue to hunker down in our homes or build out our home offices, we're going to be much more acceptable to some of the things that many offices have started to experience, and that's this influx of sensors in our day-to-day life. And I think that smart home technology will continue to get smarter, and that's where you'll see this interplay in this tension between the availability of consumer data and your privacy of that information versus efficiency, safety, and security. And that'll be a really interesting tension point, but that'll also drive, I think, future innovations. And then underpinning all of that, especially with new development opportunities, I think that there's a greater need for sustainability within the ecosystem, environmental sensitivity, building things with a lower carbon footprint. I do believe that while that in the short term has more taken a backseat to the conversation around COVID, I do think that is a long-term trend where people want to live in healthy environments, and it's going to be something that's going to be an increasing necessity. And certainly Australia's been a leader in that particular market, and the U.S. is, I think, now coming into its own and into its initial phases of understanding the benefit of ESG investing. And I think that net it'll be a really good thing the more the U.S. considers ESG as a lens by which to invest in unique opportunities that surround the real estate ecosystem.
It has been such an interesting year, hasn't it? Because it's been, here in Australia, it's been a year of bushfires and then COVID. And both of those things impact on our homes in that you can't go home and necessarily be safe anymore. And so that whole issue around environment and wellness and safety and the need and the sense of coming home have all been kind of challenged and are being rethought.
Absolutely. I think that, and that's it's good that we are rethinking that, and it's good that we're rethinking it in an environment where there are incredibly smart entrepreneurs that are figuring out solutions to those nuanced issues that impact us on a daily basis.
Dave, it has been absolutely fantastic to talk to you today. Thank you so very much for your time. One quick last piece. What's your top piece of advice to the entrepreneurs that you work with?
The top piece of advice for the entrepreneurs, I would argue, is this industry is built on relationships. And the sooner that you understand that, the easier it makes for conversations. And when you get into the mindset of a conversation with a practitioner being the baseline of a future relationship, then you're building something that's lasting. If you treat individuals or consumers or practitioners just as part of a transaction in order to move from point A to point B, then that's a that's not a long-term strategy for victory. It's an old school industry in many ways, and for the good. And we like the idea that it's relationship driven, and that's what makes this industry really unique. And so if you trust in the relationship, if you learn to facilitate the relationship and you buy into that philosophy, then you're really going to last in the industry, because the practitioners, you don't have a lot of churn with practitioners in the space that are jumping ship from the real estate industry to a different industry. Most of the time when people find that they enjoy the real estate space, they tend to stay there for their entire life. And it's a small industry in that frame of thinking, but it's also the largest industry in the world. It's built on relationships. So go out and build those relationships.
Fantastic. That's a great piece of advice. And I can't wait till we can have a cocktail again together, so we can
absolutely. We can't wait.
Say hello again.
Reach After Hours is coming to a venue near you, and we can travel again.
Awesome. Okay. Look, Dave, it's been great to have you on the show. So thanks so much for your time.
The pleasure's all mine. Thank you, Kylie.
So that was Dave Garland, head of the REACH program globally, a man who has arguably done much to put PropTech literally on the map. The REACH program offers amazing opportunities for PropTechs to scale and grow quickly, and to be accepted into their programs is a huge feather in your cap if you can make it. The quality of the mentorships and the introductions are literally second to none. And I love Dave's tips to PropTechs on understanding the difference between total addressable market and serviceable available market, your TAM and your SAM, and being able to see your technology story in those terms. I think his comments too about how REACH in their investments focus on how PropTechs look at customers and market is also highly telling. This isn't just about how cool your tech is, but how you understand the market and how you're going to win customers. So effectively, how you understand the humans and how they're going to buy your tech. And this is what makes someone invest in you if you're looking for funding. Now, if you're in the real estate industry or an observer who's keen to know which PropTechs are likely to scale and thrive, following the REACH program and their cohorts closely is a good investment tip. And now, if you have enjoyed this episode of the PropTech podcast, I'd love you to tell your friends or drop me a line either via email, LinkedIn, or on our Facebook page. You can follow this podcast on Spotify, Google Podcasts, Anchor, and Apple iTunes. I'd really like to thank my audio support, Charlie Hollins, the fabulous Jill Escudero, and our sponsors, Smidge Wines, proud to be the official wine of Australian PropTech and real estate, Direct Connect, making moving connections easy, and Home Prezzo, now part of ActivePipe, and making content marketing for real estate agents with a click. Thanks everyone. Until next week, keep on PropTeching.